and a warm welcome to this week's video update. My name is Scott. This is edition number 21 now of Zenergi's weekly updates, all of which are published on our website and YouTube channel. It is Tuesday, the 27th of September, and I'm going to take you through the price changes that we've seen over the last week and a quick look at what to expect over the coming week and what could change and influence commodity prices. So we'll start with the gas market. We have seen gas prices have increased week to week, although in recent weeks an increase of around 5% is quite a settled week really. So we can see the gas market is showing signs of consolidation after a recent dramatic fall in valuation. So you can see that in the graph depicted in the middle there. And yeah, the gas kind of market is in a state of trying to find its range now. Not really a big difference between shorter dated and longer dated movements really this week, a difference of around 1%. So it's all trending in the same direction at roughly the same percentage points. Power is very different in that, firstly, you can see on the left-hand side, those figures are much greater, particularly the 12-month period, which has seen an increase of over 17%. So there's definitely more volatility in the power market right now. Again, it is consolidating or trying to consolidate, although definitely with more variation day to day. Again, power prices have fallen off dramatically a few weeks ago, and again, it's trying to find its new position in the market and its new kind of range-bound valuations. So I'm going to take you through what's happened over the last week, the three main factors that may have influenced prices before we look at the week ahead. So the three that I've picked out are as followed. So oil has dropped another 10%. So unlike power and gas prices, which have risen this week, oil for the last few weeks has been downtrending. It has hit a low of $84 a barrel yesterday on Brent. And there are two main factors why it's been decreasing in value recently. So the first one is increased supply from the US, who are tapping into their reserves much more and kind of distributing that onto the global market. So that's putting oil under pressure. And the second one is a declining economic kind of outlook, not just in the US, but in Europe, in Asia, really globally, really. With lower economic outlooks, normally comes lower energy consumption. So that's why oil is forecasting lower consumption into the future and is discounting as a reason, as a result. So that's the first thing. The second one was, again, we're back to Russia and the conflict in Ukraine. So last week, Putin did declare an act of mobilization of 300,000 extra troops. So that is kind of a signal to the market that the conflict is far from over, that negotiations are very far away from being negotiated at all. And sadly, it looks like the conflict is set to drag on for much longer and into 2023, really. So that is bullish, if anything, on the markets. And I think we'll be paying close attention on how things kind of pan out over the next few weeks and how the conflict is positioned coming into the winter. And then finally, last week was quite a big week in the currency exchanges. So all year really we've had a weakening pound on the FX markets, but really over the last 2 weeks it has particularly been rough for the sterling. But further still, it had a really rough day last week, the day of the mini budget, which was announced by the government, and it hit a low of $1.03 against the US dollar. So that's the lowest it's ever been really as an exchange rate. So the reason I mention this is a weakening pound is a concern for many reasons, obviously, but in the energy world, it's particularly more of a concern when you are purchasing key commodities in dollars. So the likes of oil and coal, for example, are traded in dollars globally. That's the set currency. And that just decreases the UK's purchasing power and in turn may fuel inflation further. So it's not the only factor that, of course, that is going to influence inflation, but it's not a good combination to have a weakening currency and high inflation environment. So that's something to keep an eye on, and fingers crossed the pound can fare better over the next few weeks and months. Looking into this week, there's a few things to take note of. So the first one, from a fundamental point of view, is maintenance season across the UK continental shelf and Norwegian infrastructure is slowing down and coming to an end. Typically around October is the kind of when the season ends for maintenance in preparation for the winter. So September has been impacted in a big way in terms of reduced supply into the UK because of this, and that should now begin to ease off. Really, there is still some work to take place in October that's scheduled before we see that completely end. So supply should progressively get better throughout the month of October. There are expected to be further details on the 30th, which is Friday, from the government on business supports. Just a couple details. The main one is really the maximum discount value that customers can expect to achieve. And that's particularly important for flex clients. So can't say too much on that now until the details are confirmed. That's something to look out for on Friday. And then lastly, as of last night really, there have been reports of leaks from Nord Stream 1 and 2. This is reported by Denmark. Now, while those pipelines were not supplying any gas anyway to Europe, it hasn't changed the gas picture at all. But what it does mean is any hope of those coming online promptly look set to be a bit more skeptical now. So it's again, the details are thin, how bad the leaks are and what was the cause of the leaks, but it does create, I guess, bullish momentum in the markets that we can't really expect those pipelines to be resuming anytime soon, even if they wanted to, if they are damaged. So yeah, we'll have to wait for more information on that as it emerges. As always, further detail is available on our website, and we do have the Market Watch Live team you can chat to between 10 and 12. Thank you for watching, take care, and I'll see you at next week's video update.